If in the morning you decided to put on green because you knew what was going to happen on the market today, but it was a stellar session.
You're absolutely right. Matched the market map today, and if I just bring up the market map, it was an incredible session, green all across the board. In fact, looking at the top 20 companies on the Aussie market, all 20 were higher. Looking at the top 50 stocks on the Aussie market, and all 50 were higher. In fact, the worst performing in the top 50 was NAB, but that stock was up by 1%. So an incredible day on the Australian share market. I guess so it has to be kept in context of the last couple of sessions. And yesterday we did see the market down by 1.9%. So if we have a look at a 30-day graph, just to put it into context, I guess it doesn't seem as impressive. Yesterday we were down, today we were up. And I guess the next technical obstacle is 4,850 points. There were three main impacts on the markets today. First of all, we did see a positive session coming out of the US. Good US manufacturing numbers, ISM manufacturing numbers coming in ahead of expectations, and US construction spend at a 3-year high. So that really helped our market get off to a good start. But then the kicker for our market came with the RBA decision. We did see rates on hold as expected, but the easing bias remaining. And that saw the Aussie dollar taking a tumble. So if I can bring up the Aussie dollar intraday, this is what it looks like. And you can see the Aussie dollar taking a tumble on the market, but the opposite for the Australian share market. So if I bring up an intraday graph of the Aussie share market, 2:30 was when the decision began, and you can see that gave an extra kicker for the market. Strangely enough, we did see the high-yielding areas, once again the best-performing areas in the marketplace, but it was the material sector which ended up taking the top spot. Now, it's understandable why the high-yielding areas did receive a boost because of the easing bias that the RBA maintained, but the material sector, if we have a look at the material space, was a little bit more difficult to explain. This really started at 3 p.m, and that's really when we got the Port Hedland statistics out. It looks like FY13, we saw a record number of exports out of Port Hedland, up 17% on year, some good June numbers coming through, and that seemed to give the material sector a boost. So that was the third key influence in our market today, but all in all, a fantastic performance.
We like to look forward here on market day, Julia. So the big question I suppose many people will be asking is, can we continue this rise, or do the volatility of down substantially, up substantially, down substantially, does that continue?
Well, the volatility on the markets is really attributed to global portfolios readjusting for their view in terms of quantitative easing out of the US and perhaps slower growth out of China. And they're the two key macro themes which are causing the volatility in markets at the moment. And that's not just the share markets, but also currency markets and the bond markets as well. And that's going to continue until the market starts to find a base. So I don't think that's going to happen for at least another month. They're the two key macro themes to be watching out for in the new financial year. But in terms of domestically, I think the thing to be watching out for is the August earnings and the reporting season. And that's really going to be the next big hurdle for the Aussie market. If we do see very positive forecasts coming through and we see an upgrade to expectations around FY14 earnings, that would be good news for the Australian share market and will hopefully give us a bit of a boost.
Brambles spinning off the recall business, looking to list it separately, completion around, I think it was December, listening to the teleconference. Look, a good move. Do you think the market seemed to think so?
Yeah, when we do see these spin-offs happening for companies, generally they do tend to create value for shareholders. And if we have a look at their recall business, this is the information management part of their business, and they did try to sell it 12 months ago, and they decided not to sell it. So instead they've decided to spin it off. What this actually means for Brambles is that it leaves to focus it in on its core business, which is the pallet business. So I guess we're having a look at Brambles and looking at the spin-off of recall. The market obviously liking this. Brambles up by 3%. Not only that, I think the market now searching for other opportunities. We've seen News Corp doing it quite successfully. So where are the other spin-offs that we might see? And I guess some obvious ones that are out there is Australand, potentially the office portfolio, and Rio Tinto potentially with the Alcan business, which has been a major drag. So Brambles doing well today, up by 3%, and on the back of that recall spin-off.
Wouldn't that be a dramatic admission by Rio if they went and spun off Alcan after pretty much almost losing the entire house and buying this asset at the top of the cycle? I mean, they almost went under, and they've tried to stick by their guns despite selling off non-core operations. But could they really look at spinning it off?
I think aluminium has been a really difficult space, and if you have a look at Rio Tinto, 4/5 of their earnings comes from that iron ore space at the moment. So I think it is a distinct possibility. It's something that drags on earnings and has for Rio Tinto throughout the global financial crisis and currently as well. So I think it is a possibility. We know that Rio Tinto is looking at the divestment of assets, and aluminium is a hard place where aluminium suppliers to the market are really price takers in this market, and it's been difficult. If you have a look at AWC, if you have a look at alumina, it's been a difficult space to be.
It's been a shocker for them. Moving on a little bit, Bramble's one of those stocks that's also benefiting from the weaker Aussie dollar. I mean, we just have to look at QBE share price to see the help there, I suppose, as well as those rising yields at US Treasuries.
Absolutely. QBE doing extremely well, and today we really heard an update about its transformation project. So looking to make savings of about $250 million by the end of 2015. They did reaffirm their guidance, but I think the market expectations are that if they do manage to find all these savings and the US economy continues to go well, that we will see perhaps an upgrade to earnings. So QBE share price actually up by 4.2% in today's market. A big part of QBE's share price performance is that expectations around its investment portfolio, rising bond yields as well as a strong US dollar, good news for its investment portfolio. Not only that, QBE has a large exposure to the US. If we have a look at North America, it makes up 40% of the group's total gross written premiums. So a big exposure to the US economy, which is a strengthening US economy story, and also a positive performance by its investment portfolio, which is exposed to US bond yields as well as a strong US dollar. So that's a good combination for QBE Insurance, and then add on to that the transformation project and $250 million worth of savings by the end of 2015.